Hello, it is Wednesday, June the 25th. My name is David Walterman. I am a loan officer. I work for Ease Mortgage. It's a brokerage. I'm different than a bank like Wells Fargo or Chase in that I can broker a loan to about 95 different wholesale banks. Today, I want to talk about self-employed home buyers and why it's so difficult for them to buy a home, but also give them tips and strategies on how to make that possible. But first, a quick look at the market. The 10-year treasury is actually up 1 basis point right now. 30-year bonds are down about 6 basis points. It hasn't dipped enough to where banks are repricing for the worse. So we're kind of on level ground since yesterday. Also wanted to talk about a trend that we are seeing that could affect future home prices, and that is household formations. That's the demand component in the supply and demand formula. Price is always dictated and determined by supply and demand. For a long time, household formations, meaning those people who are leaving the house to form their own household and they're going to either rent or buy a house at that point, has hovered around the 1.8 million per year for quite a while. But just recently, let's say the last part of 2024 up until now, it has declined, and right now we're at about 1 million households per year. Will that continue? What's happening with that? Is it economic pressures? Is it economic uncertainty, job security? What's happening there? Is it the interest rates? For whatever reason, people are delaying moving out of mom's house. And so the demand side of housing has shrunk a little bit right now. To me, that points to a pent-up demand. They're not going to live in their mom's house forever. So at some point, they're going to venture out when there's more confidence to do so. But just an interesting trend to keep an eye on. Let's talk about self-employed home buyers. There are a lot of very successful business owners who make a lot of money, but they're not able to buy a house. Why? Because most savvy business owners also hire a savvy CPA, a certified public accountant, to help them with their books. And what do? They look for every legal write-off possible. So the CPA's job is to shield their client from as much tax liability as possible. So at the end of the year, this business owner isn't paying an exorbitant amount of taxes. That's great until it comes time to buy a house. So what does the bank or the lender ask for from a self-employed borrower? They ask for their tax return. And if the CPA has done their job, this potential home buyer is not showing enough income to buy a home. So here's the number one tip I can give a self-employed buyer. Look to a bank statement loan instead. What that does is it allows a bank to look at either 12 months or 24 months of consecutive bank statements to determine what your qualifying income is. They're not looking at your tax return. They're going to look at, let's say, 12 months of bank statements. They're going to calculate the average deposit made every month, and then they're going to apply an expense factor of usually 50%, and then that would be your qualifying income. Let's say you average $30,000 in deposits every month. Applying that 50% expense factor shows now that you would have a qualifying income of $15,000 a month. Your tax return that showed you didn't make enough money to buy a house, now all of a sudden you have a pathway to buy a house. Bank statement loans. Typically you're going to pay about 0.5% to a point higher in interest rate, but it allows you a path forward to become a homeowner. A few tips. Make sure you have a business bank account that's separate from your personal checking and savings, and make sure that all of your deposits from the business are going into that account. Keep good records. Keep good bookkeeping records. Hire a bookkeeper if you need to make sure that all of your accounts are accurate and up to date. Also, use a trusted CPA. Earlier, I mentioned the 50% expense factor. That can be lowered if you provide a signed CPA letter or like your profit and loss statement showing that your expenses are indeed lower. By lowering that expense factor, your qualifying income goes up. My name is David. If you have any questions about bank statement loans or getting pre-approved or anything mortgage related, I'm happy to help.